Do you know what Paytm, Swiggy, Unacademy, Makemytrip, Mart have in common? It is a common investor. And they are my next guests, the two managing directors of Elevation Capital. Been around a long time, used to earlier be called SEF Partners, now called Elevation. Maybe because if you get them on board, your business does indeed get an elevation. Thanks a lot, guys, for joining us here on this edition of Startup Central. Elevation back with a new fund. So, Mridul, let me take this one to you first. You managed to do this fundraise during COVID-19 when it's not safe to travel. I would imagine the fundraise has all been done virtually on Zoom calls. I guess it helps to be around a long, long time. What's the size? How many deals are you looking at?
Sure, Nayantara. Thank you very much for having us on the show. And thank you for that great introduction. Yes, we are now in our seventh fund for India overall. It's a $400 million fund. We continue to be focused on what we have been consistently doing for about 20 years now, which is focus on early stage investments. The idea is to go in early, partner with founders early, start on day one, and then keep on investing alongside the portfolio. In terms of our focus areas, they remain the same. We are fairly sector agnostic when it comes to our investment strategy. But the idea is to go fairly early stage, and that focus will remain the key for the new fund as well.
You know, SEF is, or should I say Elevation Capital, has shown its own track record. Look at the kind of companies that you have managed to back. Now, what is also very cool, and I don't think a lot of people know about this, is you guys have the stomach to say no to a deal if you feel your partner doesn't have the time for a new founder, for a new startup to be involved and to really have skin in the game. How did you manage that during COVID-19? You know, it's the black swan event of the year, completely unprecedented. How did you manage and navigate that working with the startups?
I think it's clearly a time where all of us are getting used to the new environment and a new way of working. I think for all of us, given we are extremely selective with the startups we work with, as you rightly said, each partner at our fund does not take more than 2 investments per year. And the idea is to make time for the founders and the startups we work with. So our idea has been to stay in close touch with them. Obviously, as this conversation, Zoom works, all of us are getting used to it. We have been active both on new deals front as well as working actively with the portfolio remotely. Thankfully, A, everyone's safe, secure, everyone's prioritized well-being of the employees and the customers. And B, just staying in constant touch, talking, navigating through this together has been very helpful.
So only 2 deals allowed in a year. So Mayank, for the new fund, the $400 million one, what would the average size be? And would you stick to what you know best, which is primarily consumer tech?
So I think from number of deals point of view, I think this model that we have of being very selective and not making competing investments in a sector, we will definitely stick to that. It is one of the core values that we hold very close to our heart at Elevation. And I think by doing these limited number of deals with a partner a year, we are able to give the full commitment and the full firm's capacity to each of these deals. And has served us well. Even though it's a seed deal, it doesn't mean that it's not going to get the time and attention that it deserves. I think if you look at our portfolio, there are at least 67 companies that are market leaders. And there are actually 7 unicorns in our portfolio where we were seed or Series A investors. So I think that strategy has played out well for us, and we will continue to stick with it.
7 unicorns in a portfolio is absolutely no joke whatsoever. Mridul, now let me come to you. You know, it's very easy to talk about the successes. But, in a startup's history, there are usually, 6 to 7 death-like instances. And it was very easy to have perished and died during COVID-19. It was a challenging time for the founder, for the employees, and for all of you, the investor community. Can you tell us a little bit from your experience of the lockdown, the unlocking phase, how it is, and you feel free to take examples as well, on how it is that the startups actually survived and now maybe some of them are thriving?
No, absolutely. That's a very relevant question, Antara. First and foremost, I want to say that we have immense respect for all the founders we work with, all the founders in the ecosystem. I think in these times, more than ever before, everyone's resilience has been tested. We have seen many instances of inspirational leadership, smart maneuvering of the environment, as well as people showing a lot of empathy both to their employees and customers. And honestly, we can't be more excited about the way startups have dealt with these challenges. We remain very strong supporters, and more importantly, very strong cheerleaders for their success. Now, just to talk through a few examples, Urban Company, which is one of the largest local services platform in India, understandably a business which depends on people going to your houses and delivering services, clearly went through a tough time during lockdown. The business and the services were shut down. But again, the resilience of the team and the founders really came through. First and foremost, everyone took care of employees and the supply professionals. We just made sure everyone's fine, team is working from home, everyone's taken care of. The founders really took a hard look on the cost structure. So they went through a phase where they almost did zero-based costing and cut down the cost structure by 20-25%. More importantly, while these brakes were being applied through external environment, internally we were getting ready to open up to what we believe would be a bounce back in demand. So we launched a massive internal project to be ready. We doubled down the efforts to ensure safety, trust building for customers. Every supply professional we have has an extensive safety kit. Temperature checks are done multiple times during the day. We redesigned the whole tech product to communicate our proposition to the customers. And therefore, when we saw gradual opening of services as lockdowns were lifted, we actually saw a really, really strong bounce back. So as we speak today, the company is back to actually 140 to 150% of pre-COVID levels. And we think structurally demand for a platform like Urban Company, which stands for safety, security, strong brand trust, actually the story goes stronger, and we think the growth will continue for times to come. And maybe I can ask Mayank to chip in with some examples from his side.
Sure. Nayantara, actually, across a bunch of our portfolio companies, I'll take maybe an example of another company, No Broker, which is a marketplace for real estate transactions. Now, one would assume that it's intuitive that in a pandemic and a lockdown sort of a situation, real estate would take a hit. But interestingly, this company is at about 150% in terms of revenue compared to its pre-COVID level. So it's actually grown through the COVID period. And it's actually served as a tailwind. What happened was that due to these apprehensions about health and like direct contact, prospective real estate transaction counterparties wanted to now talk to each other first online. For example, look at the photographs of the house online. A landlord would want to evaluate a tenant online before actually inviting somebody over for a visit. So in fact, COVID and the apprehensions around it acted as a massive tailwind. The company also did a lot of great things, leverage their own user base. So they launched the online rental pay platform, which for the same reasons people now don't want to hand over cash or check. People want to pay online. So they rode that wave. They launched a society management product called No Broker Hood, which has actually grown 5x in just 5 months itself, because every society now wants to have a very tight control over who all are coming in. So that was a product which is right time, right place. And that's why they grew so fast. I think these are some examples of companies who realized that COVID, while being detrimental for a lot of things, was actually an opportunity. So companies iterated very fast and hit product market fit on new offerings so quickly that that's why they are now bigger in size compared to their pre-COVID levels.
So, Mridul, just picking up from what Mayank just said, that, there was resilience, which you spoke about, but what Mayank also said, that there was no choice, but you had to rush into a new market, almost a new market, maybe accelerate plans, find a new product fit and all of that. So I know it'll sound very maybe inhumane and all of that to say it, but can this be the silver lining of COVID-19? Maybe focusing startups to take measures which they were just pushing back from doing, taking decisions which they thought they would take maybe a year or two later. And in return, what you've seen is healthier unit commerce?
I think you're absolutely right. Clearly, there is not a lot of good that came out of COVID-19. So you're absolutely right. It's very unfortunate overall. I think in tough times, people get tested and react in a manner which makes them stronger. The strong companies become stronger. What we have seen across our portfolio clearly is two things have happened. One is clearly everyone's riding on the digital wave. People's behavior is changing to buy digitally. And therefore, in even the examples we gave you, you can see people have continued to grow. In parallel, everyone's taken a hard look at cost structures, efficiencies, marketing cost, customer acquisition cost, and actually become leaner. So you suddenly have an environment where we are seeing companies that continue to grow in India very strongly. At the same time, their P&Ls and cost metrics look much more efficient. And these are, in some sense, great conditions for companies to keep growing. The cost structures, when they are redesigned, come to stick to a certain level. We'll all discover over coming months and quarters how much of that sticks. But we feel very, very excited about how healthy some of the companies look and how innovative they've been, not just on revenue enhancement, but also cost efficiencies.
Are you seeing a trend now because of COVID-19 where everybody, looked at a near death-like situation where founders have no choice but realize that, okay, yes, you have to spend money to make money, but is that mad phase of burning cash, that mad phase of doing whatever it takes to spend whatever it takes for customer acquisition, a thing of the past?
The founders in the pandemic have found a new religion, and hopefully they'll stick to it. The strongest companies have actually realized the need for managing their cash burn to an acceptable level and focus on healthy unit economics. Hopefully they'll stick to this method of operations even when the market returns to normal. But I think the stronger companies who have raised capital before the pandemic hit are looking at their current cash balance as the last round of capital that they'll ever have. If later on more capital comes, it'll come for growth. But for them to get to a great business outcome, the current amount of capital should be sufficient. I think the stronger founders are looking at it, looking at the pandemic this way. There are certain kinds of behaviors that have been imbibed now, which I think are revelation for founders themselves. For example, the kind of the cost structures on the team size and on the admin, office space, etc., that companies had built up have been let go in the pandemic, and people are realizing that they can make do with a lot lesser. So I think these are some of the things that should stick on even post the pandemic when it's over.
Mridul, you think that minimalism is here to stay, the new religion of sorts that the founders seem to have found, and this would have obviously been accompanied with, and you've given examples, for example, of Urban Company and No Broker who have done that, with tweaks in business models, which is also different from what the original vision was. So whenever there's a vaccine, we've got the Pfizer news, all of that. Do you think the founders will go back to what their original dream was, or this is it?
No, I think, I think one is dealing with what's here and now and the current environment. Two is, if you look at India as an opportunity, there is immense potential here. So the whole idea is to keep investing in growth, in healthy growth. Some of these journeys are long journeys. As long as you keep your eye on unit economics, you do well. Let me give you another example of how new opportunities are also opening up. So let's take ACO, which is India's one of the only digital direct insurers that exists, much like Lemonade or Root Insurance in US. Now at ACO, obviously, on one end, we saw, people are not driving outside. Auto insurance has some regulatory forbearance, so some of the business went down. But suddenly, as a general insurer, what a breadth of opportunities opened up on health insurance. Both, not just because of the immediate pandemic and unfortunate consequences of that, but overall awareness of people, how people think about health. We are still massively underpenetrated on some of these opportunities like insurance. But as people go through this crisis, I think there'll be a new normal in terms of people's willingness and ability to buy health insurance, life insurance, other covers for products and things that they carry with them. And we actually accelerated and launched our health insurance platform in midst of the crisis, including raising some capital to double down on it. And that platform is now growing really, really fast. I think by the end of the year at ACO, for example, we'll close out at $100 million gross premium run rate, which will make us probably one of the fastest companies to reach that milestone. So my submission is that clearly there are cost structures which have been realigned. Clearly there are efficiencies. But India continues to be a market which presents opportunities and growth potential. And to chase those potential, we'll invest. Startups will invest, founders will invest, investors will invest, and continue to grow and capture market share. I mean, at the end of the day, market like insurance is a $20 billion market. We just need 1 or 2% market share, and there is a large company that we all will be proud of.
One of our companies, ShareChat, they launched their short video app called Moj within 30 hours of the ban on the Chinese apps. Because that presented a huge opportunity. And the way they moved so quickly, even in a remote environment, was just like a sight to behold even for the investors. And now they are a clear market leader, growing super fast, given the wide space in the market. And that excited us. And I think the current investors were absolutely keen to put in more capital to support the growth the company was seeing. So capital will come if there is a growth and there is an opportunity, and that will happen. Other thing that happened for them was that even the advertisers started realizing that this market of users is very real. So large brands started advertising on them, and they found the response to be like 2x better than some of the other larger platforms, because ShareChat and Moj are targeting a user base that is not easily targeted by your other more well-known advertising platforms. So I think the ecosystem is also realizing that this is the time to move very, very fast.
When you're seeing this flush of capital that is coming into the startup universe, and we have seen that during the pandemic as well, right? Whether it is folks like yourselves who are going in for a fundraise, whether it's a RELG or the rest of the startup street and all of that. What about exits, gentlemen? We don't talk enough about exits. I know a lot of announcements have started coming in recently as far as IPOs go. Is it too soon to talk about exits? Because we're not that mature yet on that front.
See, we actually feel, Nayantara, that next 2-3 years are going to be really pivotal for the overall Indian ecosystem. We have only seen very few IPOs of scale happen for tech companies in India. But as I mentioned before, the fact that companies continue to grow and grow rapidly, and the fact that they are more efficient, are perfect conditions for a relatively larger set of companies and market leaders to actually go to the market and IPO. So our sense today is that over the next 2-3 years, we may actually see, if not more, 10 to 15 startups from the overall ecosystem go and IPO.